Now, the lot party quick tip. I'm laughing because I was on mute that whole last time, and I apologize. All right, so this is in connection with my video I did 10 days ago. It says used cars are in trouble. Here's why. Data to back it up. Please watch it because then I compare Black Book numbers on wholesale and the flow that it's been having week after week, and compare it to shopper indexes on the market. And so I want to make sure that sorry, I do have sound, I think. Double check. So anyways, I think somebody's warning me I'm muted again. I think that was an old message. Anyways, I hope you can hear it. So check out my last video 10 days ago and see how it compares to what I'm about ready to go over now. Because again, I look at shopper indexes comparably then and show that shopper activity drops off going through December after a July, August uptick from summer sales events. And then wholesale actually goes up a little bit in August and September, again, piggybacking off of the July, August sale rates. And then it starts dropping down through December. The problem is our current wholesale values are as low as last December. So if we're already at December numbers, what's this December going to look like? And again, my last video 10 days ago goes over that in detail. And I compared the two charts between retail shopper activity and wholesale values and where it's going to be heading if the shopper activity continues down the path it always does every last 5 years, or actually 10 years that I've tracked it. So what I'm going to show you next is another data point. Again, each week, Black Book puts out the information. I'm going to take you right to, I'm going to share my screen. Let's go ahead and share this screen right here. And again, as you see, market insights of 8:30. Again, wholesale, what I was talking about is right here is below or as low as the previous valleys of data. So you go down, wholesale values are going down through December, and then they pick back up in February. Okay, so we're already at that valley of last year, and it hasn't even started going down yet. Typically, it starts going down right here in October, and it went down all the way through January, and February picked up for the spring season. But again, so if you look at where we were last year, wholesale values and stuff were building up. So let's go down to this chart. And what I did on this chart, I actually copied it, I threw it into Paint, and I put a little red lines on there. So the red lines that I want to indicate to you is a couple things. This is the first week of the year, and that's January. And then pretty much, other than a little bit of a downtick the second, third week, we tend to trend up over that value through the rest of the year, and then a peak goes back down through December. Now, every year that kind of uptick there. Now, so it's showing 2009, okay, 2019, 2020, 21, and 22. Now, 2020 and going into 2021, we obviously seen that big blow up. We had government subsidizing, throwing money at people. We've had a new car shortage. Everybody scrambled out there. They treated it like used cars, like the toilet paper when COVID first happened, right? Couldn't find it on the shelf. Everybody felt like they had to go grab what they can grab. And that brought up the wholesale values. And you can see comparably, we're not even close. The green line this year is not even anywhere close to where it was last year. It's starting to mimic the patterns from the previous years that you see in the trends. So my point here is we typically, now last year we did see a dip and then a shoot up, okay, again, going into that wholesale market. But a lot of them, again, too, in that wholesale market was rental car companies and stuff. And I mean, if you think about it, November and December, high travel, one of the busiest airport seasons where people renting cars and so forth. So, but here's what typically has happened on the previous years is pre-COVID window here, 2019. You even go to 2009 and take a look at this pattern. This is the first time, week 30, and this is my red line. Week 30 is when the value this year has been below that January number. Okay. And then the other red line indicates the previous years when wholesale started dropping. And those trending patterns right there match what we showed you on our last video. Kind of matches. I'll bring it back up on the other charts here in a minute. I can revisit that, but it matches pretty much by November going into December, to the end of the year, wholesale values drop off. Okay, and so they start tampering down. And so if you look, we're already below January, and it wasn't 2019. We didn't get below January number until about November, mid-November, and then it dropped off through December, the end of the year. So we're already at that low number, pre-COVID number pattern, and we haven't even started the decline yet, because it typically doesn't start for another 10 weeks, or from the 30th week to the 40th week. So there's that 10-week spread there. But here we are at week 34, and we're already as low as 52 pre-COVID. So where is it going to head? Again, economy-wise, everything that's going on, I'll point this out. Go check out my other video. But if you notice, every one of these valleys is you're walking into the previous year, 2020, 2021. Here's the 2020 values drop off going in here through December. Okay, picked up February, March, dropped off going into spring, and then summer sales events. Wholesale went up, and then it dropped down through December and January, and then it picked up into the spring selling season. We never got that uptick of summer sales events or anything, and it's just been going down. So if it goes down, pretty much right here, it went down 2021, right around that August, September. It went down right here, August to September, down through December, 2 years in a row. If you look at the gray line, again, that's pre-COVID line. The gray line indicates everything goes down in December, back up in the spring, back up summer sales event, down through December, back up. Again, we're already at December type numbers, and here we are in rolling into September. So my point being, the next 60 or 90 days, you're going to want to make sure your inventory is lean and clean. I mentioned, I hope I'm wrong. Okay, but I don't know if anything in the headlines between higher interest rates, recession, 5 weeks in a row of wholesale depreciation are going down, the housing market, some job postings about Apple's and the Microsofts laying off people, Ford laying off people. There's nothing that I think economy wise or administration wise will take anything to make this better going to December. No different than any other pattern of any previous year. The problem is we're already at December numbers here going into September. Again, I'm telling you to get lean and clean for two reasons. One, you want to be a buyer if this does drop down. Okay, you always want to be buying in current market cycles. But two, if I'm wrong and the market turns around and things blow up, guess what? You get to go into those markets leaner and cleaner. If I'm right, you get to go into the tougher market leaner and cleaner. Okay, so get tight with your inventory, get tight with your processes before pricing though too, making sure that you're attacking the issues on your lot, but even your lead process management. Okay, a lot of times we're looking at this inventory and we're seeing it's not a pricing problem because we got 5 leads. It's just we haven't contacted those leads, and switch opportunities. We might have other leads on similar cars that we can switch to this a particular vehicle instead of dropping pricing, because again, it's going to be a battle between trying to replace cars and what they still cost at the lane. Even though it's going down, it's still high, and it might be higher than what we're retailing them for, and we might be in that window of time where it gets trickier. So if you want to see how we can help you, again, here it is, football season. Football basics is blocking and tackling. When it comes to your dealership, the basics are customers and cars. Okay, so you want to make sure that those two processes are intermingling. And I say that because a lot of times we have a CRM, which is separate from our inventory tool, and neither one's communicating. We're doing that with dealerships, helping them there. So if you want to see how we can help you do processes over pricing, right? And processes on purpose, not just winging it and trying to drop my price comparably to what everybody else